If you turn on the TV here or read any news stories, you might have heard lately this general theme. It seems like every morning when I turn on the news, I hear markets are opening lower or the S&P is down blank because of blank. So jobs week kicks off here this week, and we have a lot to address with the consumer from last Friday's data. My name is Brandon Steele, financial advisor with Mainsail Financial Group here in Bellevue, and our goal is to leave you feeling more empowered after every interaction. And in these weekly updates is hopefully to weed out a bit of the noise and share with you really the primary things that matter that are moving the markets here week to week. So we have a lot on the consumer front. We'll also touch a little bit on the jobs report, which I guess could tie to the consumer as well. And then we'll finish up with a good question of the week, which is kind of a general update on market movement lately. Because if you turn on the media, the TV lately, there might be some mixed signals. So I'm going to break that down here a little bit. So before I jump into that, I do want to address some of the data that we've got out more recently that is important to pay attention to. Last Friday, we had our usual kind of monthly slew of data come out around the consumer, which is inflation, income, and spending. So I'll kind of break that apart. So first we had PCE index, which is a measurement of inflation. And this came out right in line with expectations. So PCE index was up 0.1%, again, right in line with expectations. And core was the same. So core PCE also up 0.1%. Now, a bit of the tip of the cards. Next week on Wednesday, we get the consumer price index, the CPI data. So it'll be interesting to kind of compare and contrast the two here to kind of get a pulse on where inflation is going. We also had personal income numbers come out. So this month, personal income was up 0.8%, which was much higher than expected, actually. And spending was only up about 0.2%. That was right in line with expectations, to be clear, but the income number was significantly higher than most had anticipated for the month. Now, fast forward to yesterday, on Wednesday, we started kind of kicking off the jobs week data. So on Wednesday, we always get the ADP employment report, which shows that we added only 37,000 jobs for the past month. Now, to be clear, take this with a grain of salt. Remember that this was off pretty significantly last month compared to the non-farm payrolls numbers that we get. So tomorrow we'll be getting those data points, and we'll really want to look at those two as well to kind of compare and contrast how those numbers either align or don't. But again, just keep in mind, last month this number showed really poorly as well, and then the non-farm payrolls number came out with a pretty different story. So let's pause a little bit for concern until we get the data tomorrow on Friday. But we also did have initial jobless claims come out today, and that did tick up slightly. So again, we'll want to watch this employment story, but tomorrow's really probably the data point to watch. So be sure to tune in next week before we kind of address the general market trends. Next week, we will cover the end of jobs week, which is the employment report that we'll get tomorrow. And then we also have more inflation data with the CPI numbers coming out next Wednesday. But before we break for the week, I do want to address kind of general market trends as of late. And the reason I want to really focus here is because, again, if you turn on the TV here or read any news stories, you might have heard lately this general theme. It seems like every morning when I turn on the news, I hear markets are opening lower or the S&P is down blank because of blank. And it seems like every single day, the news story is referring to the markets being down. But there's a bit of a discrepancy in what's actually going on. So what I did want to highlight is that although it seems like with the media lately, we're hearing a lot of news stories about the markets being down, the reality is the S&P has actually been going up pretty steadily, very slowly, but steadily. Now, to be fair, what's been happening in general is the markets have been opening lower. And so that's why we're hearing these negative news stories, although they're not significant down days necessarily, but nonetheless, they've been opening lower in terms of pricing. And then it seems like throughout the day, we kind of see this very slow creep back up. And, it's not every day, but generally speaking, the trend has been that the market has been continuing to increase over time. So I just wanted to point this out because, again, maybe nobody else has noticed it, but for me anyways, I've really picked up on this theme that it seems like there's negative news stories on the markets every day, but the reality is that the trend kind of continues to grow. Now, there's problems out there, don't get me wrong. There's definitely some economic things to watch that could really shake up the markets, and that's why risk management is so important. But just to kind of clarify a little bit of where the general trend has been going since the big rebound there in April, it has kind of steadily been slowly increasing, but nonetheless increasing. So hopefully that's helpful. Again, I just thought, it's something I noticed and thought I might kind of share it with you guys in case you're kind of noticing the same on this news cycle. Now, what this may mean, I'm not saying this is the case for sure, but this may mean that what's happening is that the markets are kind of opening lower and we're maybe in this season of kind of dip buying again. You might remember this happened back in 2020, really more specifically, but it, maybe people are seeing these as buying opportunities every day when the market's lower, and that's what's causing the slow increase. Hard to say. Don't take that as what's actually happening under the surface. But it does seem like every time we do have a lower day, we actually start to see that recoup, pretty steadily, pretty slowly, pretty regularly. Now, time will tell where that goes from here, but looking backwards over the last few weeks or so, that's kind of been the trend. So I thought that might be helpful. We will continue to keep you posted on these general market trends as time goes on as well. And again, there is a lot to watch out there, but hopefully this kind of gives you just a general take of where things stand at the moment anyways. So have a great upcoming weekend. Be sure to tune in next Thursday. Again, we're going to finish up jobs week, and then we'll also cover the CPI inflation data that we get next Wednesday. We'll see you next Thursday at 3.